Hello everyone, this is Professor Radomski CFA. I'm talking to you on Sunday, November 28th. And in today's video, I'm going to briefly tell you about the recent performance of gold and what it tells us going forward. What is the likely impact for the following days and weeks, and about probably the underlying reason for the price movement that we saw on Friday. Well, starting with the latter, as you probably already heard or read somewhere, there is a new variant of the COVID-19 coronavirus, and it's called Omicron. And the point is that what mutated, it actually includes several mutations. What mutated actually is the protein spike that is being replicated, or actually, well, basically the foundation of how the vaccines work. And the problem is that because of those mutations, the current vaccines might not actually work for this mutation, and therefore, well, it's the general narrative is that perhaps it's pandemic and lockdowns all over again, right from the start. I don't want to spread false rumors. It's pretty unknown at this time. There's not enough data, but let's keep in mind that markets move on rumor and sell on fact. So traders and investors might react with their money before things get confirmed, and therefore what we already saw on Friday might have already been impacted based on those rumors, or, well, I don't want to say facts, or based on probability that what I said is true. So what happened initially? Well, gold rallied in Friday's trading, but probably on the safe haven demand, but because the situation gets unclear, unstable, and therefore people buy gold as safe haven asset. But then the reality kicks in, and people remember what happened in early 2020 when lockdown started and pandemic started to become the thing that everybody focused on, for a good reason though. And that's when gold declined as well. So people probably called that markets are forward looking, and back then it was the great unknown. Right now it's not that unknown because, well, we already saw that last year. In fact, what we saw last year was that after short-term rally, gold declined, and it declined by a few hundred dollars. So that was no small move. And since now everybody knows that that's what happened then, people might not be as willing to wait until it happens, and they might start selling sooner. And perhaps that's why gold moved up first on Friday, and then it moved back down, despite the intraday decline in the value of the USD index. So what does it tell us now? Well, it tells us that gold is particularly vulnerable for a significant sell-off in the following weeks. Perhaps months, perhaps days. It's a tough call to say what happens now with regard to timing, but what I said about those previously remains up to date. We now have a good fundamental reason for those moves to happen in the near future. From the technical point of view, we see that gold invalidated the breakout above its inverse head and shoulders pattern, and this invalidation is a strong sell signal on its own. The fact that it happened after gold invalidated its tiny breakout above the declining red resistance line, and after the RSI based on gold moved to 270, only makes the preceding top even more reliable. But the invalidation of the breakout above the inverse head and shoulders pattern is a very bearish phenomenon. It's unlikely that the decline that we saw so far was all there is to it. In fact, it seems that the move is just starting. That would be in perfect tune with what happened in early 2020. that would be in tune with what happened in 2013. That would be in tune with what happened in 2008. Why 2008? Well, after all, the economic situation was entirely different than it is right now. Well, not entirely so. If right now the general stock market is about to slide, as it did at the beginning of year 2020 and in 2008, then we might see something similar in terms of price moves on the precious metal sector. As in those previous cases, silver and mining stocks would be likely to be most affected. In fact, on Friday, junior miners declined by almost 3%. So that's very bearish. All that I said today has very bearish implications for mining stocks, especially junior mining stocks that are more linked with the general stock market than mining stocks or gold, for that matter. So summing up, the outlook for the precious metals sector is very bearish right now. This includes the outlook for silver, for mining stocks, for gold itself. But I do think that the thing that will decline the most is the junior mining stocks sector. So thank you for watching. And if you're not yet on our free mailing list, be sure to visit our website, sunshineprofits.com/sign up and sign up for our free mailing list. Over there, you'll also get 7 days of premium access to my gold and silver trading alerts as a starting bonus. So I definitely invite you to do that. If you're already on our free mailing list, I encourage you to subscribe to the premium version of my analysis. Also, I encourage you to subscribe to our YouTube channel, and also a like and a comment would be most welcome. Please note that whatever I said is not an investment advice, just my personal opinion only, and be sure to read the disclaimer below the video. Thank you for watching. Signing off. Bye-bye.